About a month ago, we put out this video called 50x your crypto portfolio by the next bull run. And here we sit a month or so later. And as you can see, we have very fittingly 666 comments on this day, October 31st on Halloween. But the point really is that there's been a lot of great communication, a lot of conversations were started by you guys in the comments with obviously a lot of opinions that were shared and communicated and a lot of interaction, which is always fantastic. So thank you very much, truly. This 50x portfolio video really hit on something that you, our Altcoin Buzz army and viewer, want to know more about. And at the end of the day, that is my job, to serve you by giving you actionable information about crypto that you can use. Today, we are going to revisit that 50x portfolio, take a look at how we've done over the course of the last month. Did we make money? Did we lose money? And one way or the other, how would you construct your ideal crypto portfolio? So stick around for this video. Not only am I going to explain my black eye, we are also critically revisiting our 50x crypto portfolio. Welcome to the channel. My name is Maddie and this is Altcoin Buzz. Happy Halloween. We are a crypto investment research company. Even though we are laying out pretty much verbatim our own investment strategy when it comes to the information we're providing here, that's all it should be considered, information. And so hopefully this video is informative to you, but I am not a financial advisor. Therefore, don't take this video to be official financial or investment advice. All right, quick explanation as to why I look the way that I do. Don't worry, I had a very peaceful weekend, always good. I actually participated in my first judo tournament. And I've never really done martial arts. I've only been at judo now for a few months, but I'm enjoying it so far. And I was able to finish with a podium placement, which I'm very, very happy about. I'm certainly nothing special, but it's a sport that I enjoy and you do get banged up from time to time. So just so you guys know. All right, so with that update out of the way, let's now get into just a brief review of the 50x portfolio that we presented back in September. It probably makes sense here to provide some context. So effectively, we did a deep analysis and looked at what, why, and exactly how much we were allocating in that original video. Check it out if you've not already. And so that video really set the foundation. We went into a lot of detail. In today's video, we're going to tell you that we have 81% of our money in large blue chip or potentially blue chip projects. And many are leaders, by the way, in their sector of the crypto economy. Bitcoin is part of that, but ETH is not. And that was part of the commentary in our last video. It's not to say we don't like ETH, but it's not part of this particular portfolio. That being said, we do have some other leading projects like the Graph and Polkadot and Matic as well. Another feature is that 9% are in small caps and 2 of our 3 are small cap gems. Additionally, 10% are in stable coins. So if we so choose, we can buy more with that dry powder at any time. We have not added any value by staking, lending, or adding liquidity with our stable coins, although obviously you can, as long as you stay liquid for a purchase, if that's the move you want to make. And just to refresh your memories, here is specifically what our holdings were in order of portfolio percentage. So starting with Bitcoin at 35%, BNB at 15%, Polygon, aka Matic, at 12%, stablecoins then represent 10%, and then we have the Graph at 8%, Polkadot at 6%, Avalanche at 5%, Kujira, Luxo, and Fuse each at 3%. And so in this spreadsheet, we based those numbers and those metrics on our film date of September 26th. On that day, we looked up the prices and the portfolio represented $10,000 in allocations. Then we calculated our P&L based on the pricing from just a couple of days ago, i.e. a month later. Now let's briefly go over the rules for a moment because those, of course, are very important when it comes to trading. You cannot plan your trade and trade your plan if you have no plan. So here is our plan with our rules. First of all, when it comes to taking profits, when we hit 50% profit, we always sell 10% to take a little off the table and book those profits. When it comes to cutting losses, because I know we selected quality projects, yes, a drop is a chance to buy the dip. But that being said, negative circumstances can and do happen in crypto. So at a 20% drop, that's when we reevaluate the position of the project in its sector. We also reconsider fundamentals and technicals and decide whether to sell, hold, or buy more. And when it comes to rebalancing, we're not going to be rebalancing just on a whim or to try to chase returns because we bought quality and we're confident in that quality. We are looking for a big fundamental or technical analysis change in order to cause us to sell or swap out one of our 9 positions. Logistically, I'm actually curious as to how you guys track your portfolio. Do you have rigid rules that you abide by? Are you a little bit more flexible? Different approaches are okay. Just hopefully you are unemotional and you take the sentiment out of your investing. That's kind of a universal truth. Let me know in the comments below how you guys do it, whether you use Excel or maybe Google Sheets or something else to track, whether you track at all. I'm curious as to how your process works. Okay, now we talk benchmarks, i.e. how we did against the market. So despite our sizable holding of Bitcoin, I really feel that the best gauge of the market is to look at both Bitcoin and Ethereum's performance during a given period of time. So that being said, how did Bitcoin and Ethereum do in the last month? The month has been kind of quiet, at least quiet for crypto. Bitcoin's return has been negative 3.38%, and Ethereum's return has been negative 1.24%. Benchmarking, which is what investment pros call this is a measure of how our portfolio does versus the general market. After all, nothing operates in a vacuum, so it's important to consider what it is you're competing against. If market conditions are tough, as they are now, then really thinking you can crush the market with a 5x return in a month, that's just not realistic. And if you see here, the market lost money in the last month, with 35% of our investment in Bitcoin. You'd think that we lost money too, and the truth is that we did, but thanks to the solid construction of our portfolio, we lost less than Bitcoin did. Our other 8 choices, other than stablecoins, actually did better than the market. We know this because our return for the month is negative 1.03%. So did we lose money? Yes. Did we lose less than holding both ETH or Bitcoin over this month? Also, yes. Let's talk about the profits on a project by project basis here. So this is where portfolio construction becomes very important. And I want some diversification, but not that much. I don't want to be the market. I want to beat the market after all. And I have 10 holdings here, and one, the stable coins, really has no change. It would only change really if it were used to purchase another project, which was not the case here. We're still keeping our stablecoin allocation for the purposes of illustration. So that means of our 9 holdings, 3 of them made money, plus our stable coins held their value. And you can see in these 4 rows that Fuse made a small profit just above break even. That's a profit of $15 on a $300 investment. The numbers are small, but it's still a 5% return in 1 month, which is good performance. Then after that, we had Polygon. Our investment of $1,200 earned us $166. That's an ROI, return on investment, of 13.8% in 1 month. And for one of the biggest projects in the industry, that's pretty good. Then we had our top performer, one of our gems, Luxo, which pumped more than 50% this month, earning $158 on an investment of just $300. There we had an ROI of 52.6%, which is very impressive. And based on our rules, and if this still holds after filming, we will sell 10% based on our trading rules. Again, it's always important to book some profits. Now, look, you might be thinking, oh, man, if you could have put all your $10,000 into Luxo, look how much you would have made. Yes, we always think that way, but look, hindsight is always 20/20. You can never predict with certainty. And if you think you can, you're just gambling. So it means that it's absolutely not only the wrong way of thinking, but it's also a dangerous way of thinking. So don't beat yourself up over the fact that you could have made more. You could have always made more. And look, I like Luxo. In fact, almost everyone at Altcoin Buzz really likes Luxo. But what happens to our risk when we spread it out from 9 projects plus stablecoins into only 1? Risk skyrockets under those circumstances. So again, don't build that kind of portfolio. Our goal is to be here for the long term, not to live and die by any one project, especially one that didn't even exist 3 years ago, and honestly and candidly may not exist 3 years from now. Therefore, our portfolio allocation addresses these risks based on the amount that we've invested in our assets. Do Bitcoin and Polygon have a lower risk of project failure than Luxo? Yes, of course. So their portfolio allocation is higher. And again, this is kind of a middle of the road portfolio when it comes to risk, but that is specifically how it was constructed. So if you would like us to make another portfolio based exclusively on small caps, we can do that. We can make another video based on only small caps. If that's something that you'd like to see, be sure to comment below. Your comments last time were fantastic. You guys really got the conversation going, which is why we're doing this follow-up today. So whether it's small caps, whether it's something else, if there's something that you'd like to see, shout it out in the comments below. We'll be sure to follow up with a video particular to your suggestions. All right, we have to be fair now. We're going to be discussing losses by project, and the biggest loser by percentage, unfortunately, was the graph. GRT lost 18.7% in just a month. And this just shows how unpredictable the market can be. Really, you have the #1 without question project for querying and organizing blockchain data, and in a month it drops 18%. Well, look, that's why we have other holdings. Next is another of our small holdings, Kujira. With Kujira, we lost $42.50 on an investment of $300, or negative 14.1%. This is why we want some portfolio concentration, but not too much. And it's entirely conceivable that Kujira and Luxo could trade places in terms of performance in the next month. And I don't know when or if that could happen, neither do you, but that's the point of this particular portfolio construction. The next two biggest losers are unfortunately two of our favorite layer 1 and or layer 0 projects, Polkadot and Avalanche. They lost 12% and 10% respectively. But for the long term, we don't expect that trend to continue. And finally, now for losses, and covering 50% of our total holdings are Bitcoin and BNB. They lost 3.38% and 0.4% in the last month. And as I said, that got us to negative 1.03% for the month. And so as you can see, the overall trend was downward. We lost $103, but that was mitigated by the fact that we had some strategic diversity, but not too much in this portfolio. All right, so what lessons did we learn in this last month? Well, #1, we learned that our portfolio construction looks pretty solid, given that risks are relatively low. Secondly, for that risk, we beat both holding BTC and ETH, both of which are common long-term strategies. #3, for our other 8 holdings, aside from Bitcoin and stablecoins, it's absolutely impossible to gauge where their price may go in the short term. And in the short term, we're talking the next month or so. And because of that third point here at #4, we have no idea as to where things will go. And so we choose 9 solid projects and then build out the portfolio percentage based on risk. And lastly, we learned that what we're doing seems to be working. Like I said, this is a long-term endeavor. We're going to be having updates about this exact portfolio construction in the future. Stay tuned. Next month, we will be revisiting this. In the meantime, don't forget that for a limited time, our amazing Altcoin Buzz access group is going to be offered to you for free, which means you can get all of our most up-to-date research as soon as it comes out. And not only that, you can also interact with and talk directly with the great researchers. This is a $99 per month value. We're allowing you to try it out for free. You can check it out by clicking the link in the description below. Best of luck if you choose to invest. I mean that with a lot of sincerity, but of course, never official financial or investment advice. If you're still watching this video, guys, be sure to like, subscribe, share, hit the bell to receive notifications. Check out these other pieces here popping up to my left and to my right. Stay safe out there, members of the Altcoin Buzz Army. Have a great Halloween. And as always, we hope to see you again soon in our next video. Take care.